I think the big lesson from that crisis, for me, was that when there is a problem of that magnitude and people lose confidence in the financial system, it is inevitable that the government or the central bank is going to have to lend a very large amount of money to the financial system to tide it over a temporary loss of confidence, and if necessary, recapitalize it and impose losses on the shareholders of banks. But the real point that was missed at that point was that if we are going to give banks, if you like, an insurance policy to give them access to a large amount of cash that they can borrow in a crisis, they ought to be paying an insurance premium up front in the good years before the crisis happens. And that's what was not done. And part of my book spells out a way in which banks can be made to pay, in effect, an insurance premium in good years, so that they would then be entitled to draw on that insurance policy in a crisis, and people wouldn't then feel that somehow the banks were being bailed out in a way that was not available to the rest of society.